I'm letting you guys in on a secret today. We're talking about small caps. Why do small caps do what they do? Why do they go up 1,000%? How does it work, right? So the idea here is that a lot of people are like, man, you know, the market is regulated. There's a lot of rules, there's laws, there's protection. Well, there's kind of like this wild, wild west of small cap day trading. Now, when I say small cap, I'm talking about stocks that have like 1 million shares and the float to like 10 million, maybe 20 million, you know, in general. So we're talking about market cap. We're talking about these stocks that go from like $1 to $10 in one day and how they crash back down. And we're going to talk about the secrets, stuff that I've learned and things that I probably shouldn't be telling you guys because this is not going to be good for business. Me letting you in on secrets in the market is going to make it so that people won't want to tell me any more secrets, or, well, people won't want to give me money to help with their secrets. You see what I'm doing here? I'm not helping myself. I'm helping you guys, so screw it. Let's do it. I'm here on YouTube trying to help somebody out there, or just give some knowledge to people out there who are looking for a little bit more knowledge and to learn more about day trading small cap stocks and how it all works and why it exists in general. Talking about it here on the #1 day trading channel, so make sure you guys stay tuned. What's going on, guys? So today I want to talk about day trading small cap stocks, small market cap stocks. These are stocks that are very volatile, stocks that you see me trade or other traders on YouTube trade, people like Ross Cameron and other traders who, you know, trade small cap stocks. Now, the first thing that I want to talk about here is obviously small caps are great because, you know, the stock goes from $1 to $10. There's a lot of action, there's a lot of volume and stuff going on there. You know, you can get in, you can make money, but you can also lose a lot of money. So like anything in life, if it goes up quickly, it's probably going to come back down just as quick. Now, we've seen stocks before go from $1 to $100. We've seen stocks go from $1 to $30 in only a few days. You know, for the first day that goes from $1 to 10, the next day from 10 to 20, and then 20 to 30. We have seen it happen over and over and over. This is not a coincidence, right? If you look at the chart of a lot of these small cap stocks, what do you see? It's these spikes, these random spikes. And now if you do a little bit more research, you can kind of figure out kind of when this happens, why this happens. The first reason that this works the way it does, right? It's a business. The small cap market is a business. Now, it's going to sound crazy that it's like, oh, Patrick's got some kind of conspiracy theory here. But what you really need to understand here is that the small cap market exists and it works the way that it does because of a couple key things. First off, you have the suckers. Now, the suckers have existed for quite some time. You know, people who have been chasing penny stocks, people who have believed that buying some type of biotech stock at 25 cents or at $1 is going to one day be worth $100. And the sucker has existed for quite some time. If you've seen the movie Wolf of Wall Street, you would have learned a lot about this type of sucker. Now, this sucker is the type of person who I've done. I mean, I guess I'm the sucker here as well. The sucker is the person who tries to trade the volatility, who tries to make a little bit of money off a big major move. And these people, like, it's me. I've existed for quite some time. And I've been chasing the idea of trying to capitalize on these, you know, 500, 600% movers in only a few days. So that's the key here, is that there's a lot of people out there who want to get rich quick. Now, the second is that there's a lot of people out there, there's people out there. There's a few people out there who are smart, and they understand that A, there's a lot of suckers who want to get rich, and then 2, they also understand that a low float stock with a little bit of news and a little bit of volume can create quite a buying frenzy because, again, the suckers and the chat rooms and the newsletters and all of these things combined create quite a buying frenzy, a volume that really should not be seen on these types of stocks. One, let's recap. We've got the sucker, we've got the smart person, and then we've also got just the overall institutions and places that kind of help out and facilitate this type of action. Now, the sucker is obviously going to buy or short and get squeezed out, and it's going to create the volume. The smart person this is where it gets tricky at, right? You probably don't understand this part. The smart person is the person who ends up buying up a lot of the float. Now, if you have a stock, let's say you have a stock that's got 2 million shares. This person who is smart starts buying up the float when the stock's not moving. It's very slowly going sideways. It's really cheap. It's crashed down from like $10 to $1. It's worth nothing. The company is totally crap. This person starts to buy up the float. Now, as they're buying up the float, they have a couple objectives. First off, they want to make it so that the supply is much smaller already on a very small supply stock. That way, when the volume does increase, when the action starts happening, the stock will easily move higher because there's not anybody trying to sell. And secondly, the smart person has an idea of kind of what is going on with the company, in the sense that, okay, they know that there's probably going to be some type of news coming out soon, that there's some type of idea of a PR. This smart person could also be working with a PR agency to promote this stock, to get people to buy this stock, to create the volume. Again, this smart person, remember, they're smart, they've got a lot of money, and they've got kind of an inside knowledge of the stock. Again, me, you, and everybody else who's watching this video is the sucker who is going to buy and create the volume and create the move that's going to send the stock from $1 to $10. All right, so back to the smart person. So the smart person, first off, could be working with the company. I'm not going to rule it out. You can't rule that out. There might be some insider trading. The idea, there's news coming out. The idea that people inside the company could be possibly pumping the stock themselves, and vice versa. So now they're pumping the price of the stock, or they're hoarding the stock so that when the stock does start to move, there's no supply out there. Now, also, what you have to think about here is that there's people out there, there's different brokerages, there's different market makers or SEMs that basically, they are the guys who find the shares for a stock when somebody wants to short the stock. Now, the smart guy who has 200,000 shares, he tells the guys who have the locates, that want to get the locates, the locating facilities or institutions or whatever you want to call the guys who locate the shares so that the suckers can short the stock. He says, hey, I have a bunch of shares and you can loan out my shares. You can pay me a fee. I will make money on all the shares that I own, right? So I've bought all these shares for $1. I'm going to work with a company who's going to loan these shares out to all the suckers. Remember, the suckers are the guys who are going to create the volume. Now, the smart guy, again, is going to loan out all the shares. He's going to earn money on all of those shares that he's loaning out because he's getting a locate fee, interest, and all of that type of stuff. Now, that's happening. The smart guy and the locate company are working together here. The brokers, the locate company are working together. And now the sucker, first off, he's going to help pump the price of the stock because the stock's going to go higher and higher. He's going to buy into the FOMO. He's going to pump the price of the stock. While the smart guy is now loaning out shares to people who want to short the stock as it's pumping higher. He's bought in at $1. So if the stock goes from $1 to $10, he's up huge, but he's also earned money along the way. So he's also closing out positions, dumping a little bit as it's going higher, but still holding a core position here because, again, he's making money as it goes higher from $1 to $10 from the short locate fees. He's making money from the overall price of the stock, and he's possibly helping to push the price higher by buying more as it's moving higher, giving it support, etc. Again, there's three people here. The smart guy is making a lot of money. The sucker is trying to gamble and basically hoping and praying that he's going to make a lot of money because he's going to be shorting as it's going higher, and if he does get squeezed out, he's going to create more volume by having to close his short position and, again, buying the stock, creating more volume to go higher. He's paying the smart guy the interest, basically the short locate fees to the smart guy, and the smart guy is then again selling his shares as it's going higher, and he's making money and he's pumping the price. Now, those three people are very key to this whole process, this world of small cap trading. Another thing you need to understand here, there's probably a fourth person as well, but the smart person is working with this fourth person. Now, we're calling this fourth person the marketing, right? There's a marketing aspect of this. There's newsletters, there's PR. When people ask about PR, they're like, hey, this company, they've got a great drug. They're looking like they're really going to have a lot of potential. If you look and you understand how a PR works, a PR is a press release that's written by a company who specializes in writing a press release. This company also specializes in writing a press release that has keywords that will create a buying frenzy. They'll put keywords like a buyout. They'll put keywords like a buyout, a strategic partnership, a large amount of money if they can possibly get to a certain point. But the thing is, at the bottom of the PR, in general, it always normally says some type of disclosure that says that the material facts, that the information inside of this PR are forward-looking, statements. So if the company right now makes $1 million, in the PR it says this company could possibly one day make $10 billion. Possibly, because this drug is forecasted to sell on the open market and it can make billions and millions of dollars. So what you have to understand is that there's people working to pump the price of the stock. The sucker is buying the price as it's going higher by creating the volume. The smart guy is dumping the stock as it goes higher. Either way here, the smart guy is winning because guess what? He bought at $1. He's making money on the shares as they go higher when the short locates. The shorts are getting squeezed out and then buying back his shares at a higher price. Everything is happening here perfectly, and the only person who's really winning here is the smart guy. The sucker, maybe they get rich along the way. Maybe they, somehow buy at $1, they get lucky, they sell at $10. But overall, the smart guy here is controlling everything. And that's one thing you have to understand here, is that the small cap world, although it seems very, very illegal, a lot of it is legal, I guess. There's no rule against buying the float of a stock. There's no rule about loaning out your shares as short. There's no rule that says that you can't basically buy the stock as it goes higher, pushing the price higher. There's a lot of things that you could do here. There's computer algorithms that help support the price of the stock. Like I said, there's a lot of things that are promoting the stock. You got all these different websites now. You got newsletters, you got chat rooms, you got people who are offering to pay people like myself to talk about a stock. I'll show you an email right here. I got this email just the other day. And again, this is not helping me, right? This is probably gonna be the end of me ever really getting any emails from people trying to offer me money to promote a stock ever again. And I'm gonna leave out the names and stuff like that. But in general, this is not the first time this has happened. I get emails all the time from companies who are like, hey, we have news coming out. We'd love for you to share our PR. Or, hey, we really think this is a good stock. You should talk about it and stuff like that. There's a reason for that. At the end of the day, they want more and more eyeballs on the stock. So that way, when the stock starts moving, guess what? All the suckers, again, start buying, creating a buying frenzy. And this will happen over and over again. Because remember, the smart guy, he bought 300,000, 400,000 shares of the stock. And he held it from $1 or $10. He unloaded 100,000. He just paid off basically the entire investment and more. He made profit. He can still hold another 300,000 shares to keep the float locked up, hope the price goes higher. He can also hold it for the next pump. He can also wait for it to crash, buy it again, and create the next pump. Over and over. If you look at the stock price, you look at the chart, you can see big move higher, crash back down. Big move higher, crash back down. This is not because anybody actually believes the stock price is going to go higher long term, but because of this little world here of the sucker, the smart guy, the short locate companies, the SEMs or whatever you want to call them, and then you've got the PR companies as well. So there's an entire basically industry built around small cap trading and penny stocks, stuff like that. And that's one thing you need to understand here is that this world is built to make one person rich, which is a smart guy. It's built to allow the sucker to gamble and potentially get rich, but you have to understand this is a game. This is a game that's being played by professionals. This is a game that's being played by people who are a lot smarter than you and people who have a better idea because they're actually controlling the move. They're manipulating the stock. Now, manipulation in the stock market is obviously illegal, but the problem is that the SEC isn't able to really prove it so easily. It's not easy to prove that some guy bought up the float and then pumped the price because of the PR company, and then the company was insider trading, and all this stuff was going on. It's almost near impossible to prove. But having an understanding of this world, understanding of how this all works, is the key to becoming a better day trader. Because first off, I think a lot of people sometimes become confused because they believe that just because the stock is up 200%, that it's going to crash back down. Now, it probably will crash back down at some point, but nobody knows when. And at the end of the day, remember, the smart guy, it's in his best interest to keep the stock higher so that he can get more locates in terms of getting more of his shares loaned out and earning a locate fee on that, earning interest and all of that. So the longer he can keep the pump going, the better. And obviously, the higher the price goes, the more he can dump the price and blah, blah, blah. So there is no like secret to like, okay, now the stock is up 200%, it's time to short. Because remember, you're just adding on the buying frenzy. If you're a sucker who's shorting at $3 and you're getting covered at $4, you're just pumping the price with the smart guy. You're not actually doing anything. You're losing money, but you're contributing to how this whole thing works. And that's, I don't think it's not a sad thing. I don't think I sit here and go, oh, you know, it's sad it's sad. This is how the world works. But you have to understand what's going on behind the scenes. And understanding that just because the stock went from $5 and crashes back down to the VWAP and then goes back up to $5 and then it's like, okay, this is the top. That does not mean it's a top. And also vice versa. You know, if a stock starts to crash and it's crashing, there might not ever be a buyer again. It might just go back down to $1. You have to understand the volatility here and how this is all being played out. It's like one big massive chess game. They do these things where they're like, okay, this is what we're going to do. We're going to let the stock go to like $5. We're going to start dumping. We're going to get the stock to push back to $3. That way all the shorts are going to load up, right? The shorts are going to load up. They're going to get short. We're going to get all of our shares loaned out, right? It's going to be beautiful. And then all of a sudden, we're going to start to buy it back. We're going to buy it back. And we're going to push it to $7. So all those shorts are going to buy, and end up getting squeezed out. And now, again, they pumped it to 5. They dumped it to 3. They push it back to 7, and they do this over and over. And they know what they're doing. Trust me. You know, you don't become a smart rich guy because you don't know what you're doing. You know, you're not a sucker. These guys are not suckers. These are the suckers. This guy's not the sucker. The smart guy who's buying the float, pumping the price, working with the PR company, working with the company, and all this, these are the smart guys for a reason. The sucker is playing the game. We're just the pawns. We're just the pawns. So at the end of the day, this whole thing, what you should really understand here is that it's all just one big game. And there's no real secret to like, okay, this is the perfect time to short because it broke below the VWAP or anything like that. You just gotta really just kind of learn and watch and see. I think at the end of the day, when the right opportunity comes along, when there's a stock that's got a really small float and it's got, you know, news or whatever behind it, you got to be ready to jump in. You got to be able to take some profit and, you know, hold on for the ride because you never know. Just the other day, we had a stock go from what, $2 to $10 and then from 10 to 20. There's always opportunity out there, but really understanding how that opportunity works, understanding the market, the small cap market, is going to make you a better day trader. So there it is. I don't want to say it's a behind the scenes look, but this is information that nobody else on YouTube is talking about. So there it is. If you guys haven't already, do me one favor, hit that subscribe button. I'm out of here. I gotta go.